Hi there, everyone. This is Sean, and welcome to Questioning Money, a newsletter taking a closer look at how money works and how it affects the world around us. We've spent a lot of time so far talking about the history of money and how money has developed in modern times, but money is still a developing human invention. How might money be different in the future compared to what we know today? With the creation of Bitcoin in 2009, we can start to see the benefits of a new money that was natively designed for the internet. But what actually is Bitcoin and what are its properties? First, let's think about how digital cashless payments are today. If I want to pay you or anyone without using physical cash, there's currently no way to do that without going through a financial intermediary. Think about it. Credit and debit cards go through both the bank and the payment processor. And if you use an app like Venmo, Zelle, or Cash App, you add another company to the equation. Every time you pay digitally, your bank, MasterCard or Visa, and Venmo all get every piece of information about your payments, which they use to build a complete profile about you. The idea behind Bitcoin is digital cash, to make digital payments more like handing a dollar bill to someone, as opposed to having to go through a bunch of intermediaries. In late 2008, on what was known as a cypherpunks email list, which was essentially this small group of computer nerds, a person using the name Satoshi Nakamoto sent out a white paper detailing his new digital cash idea called Bitcoin. Satoshi's goal was to create a new form of money, a natively digital cash that was fully peer-to-peer. If you send a transaction through the Bitcoin network, there's no intermediary that the transaction has to run through. There's no bank, no company, and no government. The network is decentralized. Bitcoin was designed to be more like exchanging a dollar bill with someone than like swiping a credit card. What's important to realize is that this ability to send a payment digitally without any intermediary has never existed before. This is what makes what Satoshi Nakamoto did with Bitcoin so unique. Satoshi was able to create this digital Bitcoin network where there is no centralized point of failure. Using a system called the blockchain, with these things called nodes and miners, Bitcoin is a distributed, decentralized, and global system. There's no server or database that can go down and lose power, and there's no company that can shut down or be shut down. Besides its decentralization, although both of the following are directly related, Bitcoin has two main properties that we're going to discuss further: sound money and censorship resistance. Bitcoin has a fixed monetary policy. There will only ever be 21 million Bitcoin. Starting at zero, every 10 minutes on average, new Bitcoin is created at a fixed rate. Every 4 years, the amount of Bitcoin that is created every 10 minutes cuts in half. This happens until 2140, at which point no new Bitcoin will ever be created. There is no Federal Reserve, no bank, no individual, and no group of people that can ever change this. This is interesting in a few different ways. Nothing like this has ever existed before. Secured by what is known as cryptography, as well as through its decentralized properties, Bitcoin has a level of unforgeable scarcity that has never been seen in any type of money before. There has never been a counterfeit Bitcoin, and the supply will always remain fixed. Bitcoin is also essentially infinitely divisible, with the smallest unit, known as a satoshi, being 1/80 millionth of a Bitcoin. So yes, you can acquire a tiny fraction of a Bitcoin. If you can understand the value proposition of owning gold, you're already about 75% of the way there with Bitcoin. Bitcoin has none of the history of gold, but was created specifically with those properties in mind. Through math, aka cryptography, we now have an asset that cannot ever be inflated, which you can also send across the globe near instantly without going through any intermediary. This all represents what is known as sound money. And then you add censorship resistance. Censorship resistance is the idea that everyone using the Bitcoin network is equal. Anybody, at any time, can send a transaction to anyone they choose on Bitcoin, and the transaction will go through. The system is tamper-proof. No third party, like a company, individual, or government, can restrict or prevent you from transacting with someone. According to the Human Rights Foundation, more than 50% of the world's population lives under an authoritarian regime. For these people, often living under ruthless dictators and human rights abusers, Bitcoin can be a valuable financial tool as a censorship-resistant medium of exchange. In China, people who use their WeChat app to pay for subway fare to attend free Hong Kong protests were later tracked and arrested. Even in the US, workers in often legal industries like pawn shops, pornography sales, marijuana stores, and online gambling businesses are denied the right to use banks at all. Denying the right to even use the banking system is incredibly dangerous. Censorship resistance is not about breaking rules, though. It's about neutrality. It's about designing a system that can't be corrupted in the first place. With Bitcoin censorship resistance, combined with its fixed monetary policy and decentralization, Bitcoin is the first truly neutral money in modern times. Having more Bitcoin does not allow you to change the rules to get your way, like how it works today in our current system. The rules are set in stone, and anyone who wants to can participate. Now, Bitcoin is still a risk. Bitcoin has only existed for 11 years, and its value is very volatile. In the last year, the price of Bitcoin has ranged between a high of nearly $14,000 and a low of about $3,000 per Bitcoin. This thing is volatile, and it's pretty likely that at some point your investment will be down. The volatility is a result of the network being so small in the global scheme of things. As of the time of this video, the Bitcoin network has a market capitalization of about $200 billion, which in the grand scheme of things in terms of global currencies or even the biggest tech stocks is a very small fish in the pond. This means that it takes less money buying and selling to significantly sway the price in either direction. The biggest real risk to the continued success of Bitcoin is really just a question of, will people want this? Money needs users. The entire motivation for me making this newsletter was that people don't think about how money works. And if you don't ask that question, you're not really going to get Bitcoin. The growth has been very impressive so far, but if people don't continue to think about money, the network may eventually stall out. What Bitcoin is really about, though, is a few things. It's the idea of a neutral money that can't be abused and corrupted. It's about improving on the store value properties of both gold and especially modern fiat with a scarcity that has never existed before. And it's about being a digital medium of exchange where you can transact globally without your information being routed through half a dozen intermediaries that are all collecting your info along the way. So that's it for this video. If you still don't get the point of Bitcoin or just aren't interested, I hope at least maybe now you at least respect it as something more than just random internet money. So if you like the newsletter, please subscribe to get it sent to your inbox every Monday. You can find me on Twitter at Sean Cover, and I'll be back next week. Thank you, everyone.